a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cybersecurity stocks and ETFs. And cybersecurity stocks are rising today when the market is down, particularly Palo Alto Networks. That is up about 9% today because it reported excellent results and raised its quarterly outlook. And other cyber security stocks, including Fortinet, Checkpoint Software, Cloudflare, all these reported recently. They reported excellent results, and that is why these stocks and ETFs have been rising over the past few days. But earlier, these ETFs had underperformed the NASDAQ 100 index this year because the NASDAQ 100 obviously benefited from AI enthusiasm and also CrowdStrike's more than 30% plunge in July following the global IT outage also impacted these ETFs because CrowdStrike is one of the top holdings in these ETFs. The CrowdStrike stock has also recovered somewhat since then. But the outage revealed how important these cybersecurity companies have become and also exposed the risk of dependence on one company for cybersecurity solutions and for investors' dependence on one company in your portfolio. So ETFs work better, particularly in a volatile space like cybersecurity. So cybersecurity ETFs are better than investing in cybersecurity stocks, single stocks. Overall, the outlook for this space remains quite bright because the world is becoming increasingly digital and interconnected, and the frequency and severity of security breaches and threats continues to rise. Particularly, we have seen so many ransomware attacks this year, and that is why there is a great need to strengthen our cyber defenses, and spending on these products and services is expected to rise significantly in the coming years. IDC forecasts that global security market will see double-digit growth over the next 5 years. And according to McKinsey, this is the market for cybersecurity technology and services providers is a true $2 trillion market opportunity. Now, let's take a look at cybersecurity and artificial intelligence. So the rise of AI is actually heightening risks from malware and ransomware because bad actors also use AI for targeted attacks, deepfakes, etc. At the same time, we will see the rise of artificial intelligence. This also presents significant advantages for cybersecurity enforcement. So these companies will use AI more to boost efficiency for timely detection and real-time responses. And that is why we could see more M&A in the space. In fact, Cisco Systems completed the acquisition of Splunk for $28 billion earlier this year because Cisco hopes to boost its AI-powered cybersecurity monitoring tools. Google was trying to acquire a cloud security software provider, Wiz, which would have been Google's biggest acquisition ever. That was for $23 billion, but Wiz then walked away and There were reports that they were concerned that the deal will not be able to clear regulatory hurdles in the current administration's regulatory stance. So we could see more M&A if there's a change in regulatory stance or otherwise as well, uh, because companies are trying to boost their cybersecurity products and solutions, particularly those focused by acquiring those companies which are making a lot of use of artificial intelligence. Let's take a look at three ETFs. So the first one I'm highlighting is the most popular in the space by First Trust Cyber. It holds cybersecurity companies from the technology and industrials sector, 6.9 billion in assets, charges 59 basis points, and those holdings are weighted by their liquidity. Let's go to the code page on Zacks.com. You can read our research reports, articles, and using the link, you can go to First Trust webpage to learn more about this ETF. So, as I mentioned, cybersecurity companies which are engaged in cybersecurity segment of technology and industrial sectors, and the index is weighted quarterly by free float market capitalization. And looking at the holdings, you will see that Infosys, Broadcom, Palo Alto, Cisco, CrowdStrike, and Fortinet are the top holdings in this ETF. The second ETF I'm highlighting was actually the first ETF in the space. It was the first to launch for cybersecurity ETF to make its debut. This focuses on cybersecurity technology and services providers and has 1.8 billion in assets currently. Somewhat similar expense ratio, 60 basis points. Again, you can learn more by going to the quote page on Zacks.com, and this was acquired by Amplify recently. Earlier it was ETF MG product. So you can go to Amplify webpage for the CTF and look at the top holdings and other details. So Broadcom, Cisco, Palo Alto, Fortinet, and Northrop Grumman are the top holdings in this ETF. The third ETF that I'm highlighting is by iShares, and I own it in the ETF investor portfolio that I manage. This is among the cheapest in the space, 48 basis points expense ratio, 883 million in assets, and this follows a market cap weighting scheme. And again, you can learn more by going to iShares webpage for this ETF. Look at the strategy, holdings, etc. So you will see somewhat different holdings in this ETF, weights, etc. But you still see those popular companies, Palo Alto, CyberArk, and Checkpoint in the ETF and among the top 10 holdings. On the last slide, I have the comparative performance of these ETFs versus the S&P 500 index. So over the past year, Amplify is the best performer, up about 35%, but others have also delivered somewhat similar performance, up between 31% and 33%. And the S&P 500 index is up about 29% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything, and I'll see you next week.